look, if you want to go back a little bit, this is our 5th year of the global crisis. The issue is no longer simply what happened when. This is cumulative. Just think about ourselves. If you have a situation in which you are having difficulties, you lose a job, you start looking at what can you sell to maintain yourself. After 5 years, what have you got left? Now, that's the same for a country. Okay, so they've looked at their fiscal choices, they've got into sovereign debt, and the numbers are horrendous. And I think just think about how easily now we are in the trillions. We're not in the millions or the billions. We're now in the trillions. So the scale of this is just huge. And the question is that if nothing got worse, if we were at we are now, right, how long will it take to come out of this crisis? 5 years? 10 years? So we're talking generationally. If you look at it, that you lose your job at 50, you're now 55. You've got another 5 years. You were looking forward. You've saved all your life. You've worked all your life. What does it mean to you? So we mustn't forget behind all these numbers lie ordinary individuals whose lives are being seriously affected. So when we look at it and say, where to from here, we're actually in a worse position now, in my view, than we were at the start of the crisis. Because you don't have fiscal room. Your debt-GDP ratios on average are around 100 plus. How do you ever work out of a country's debt when it's at 100% of GDP? And as we've seen with Greece and others, it's 166 or 150. These are just astronomical numbers. So you're in a situation where the room for what needs to be done, in essence, has been picked up by central banks. And that's the point I'm making here, is that central banks are doing all kinds of things because they're the only ones that seem to be able to have some room. But what they are doing is not conventional for a central bank. So let's look at where we are now. I don't think this is about all the scenarios that could be played out about Greece exiting, as they now call it, Brexit. And Italy is now exit. So I don't know what will be left if you have Brexit and exit, because who's left standing, but there we go. So I don't think it's about Greece per se anymore. Whether it has an orderly or a disorderly, or whether it can manage a government, that's one thing. The real question is the contagion from Greece. So you have Ireland, you have Portugal, which are still peripheral. Spain's not peripheral, guys. Italy is not peripheral. Italy is the 3rd largest economy in the Eurozone. So what are you seeing in this context? Impact on systemic banking, right? Sovereigns that are hugely in trouble with sovereign debt. You're seeing a change in government. I think it's 7 or 9 countries in the Eurozone who have changed government, which in many ways has become a weak coalition government when you need the ability to take decisions. You've got rising unemployment. You've got half of the Eurozone in recession, and you're only technically not in recession because Germany's growth was above expectation and therefore pulled you above the zero. Otherwise, the Eurozone is in recession in many countries. South Africa, 30% plus of our manufactured exports goes into Europe. The United States, very dependent. China, very dependent. So a Eurozone meltdown or lack of decision, because at the moment we've been bumbling along. And we think, okay, just kick the can a little bit, kick the can a little bit. I don't know how many cans we've got to kick, but we're still going down that road. The reality and the tragedy is that how sustainable is this and how much longer can this go on for? And it can go on for a long time. It's been going on for a long time. But each country is getting worse. So what you're seeing is each country looking at its own position. At the start of the crisis, you had a collective view on what you could do. Now you haven't. So how do you get policy decision-making that can be effected and implemented in the Eurozone? So to me, the challenge of Europe is that there is no end in sight. Many countries are seeing things worse. And as I indicated, you've got banking systemic issues, you've got sovereign debt issues, but you've got unemployment issues. And let's not underestimate that. You know, South Africa is a little bit used to big numbers. Our unemployment is 25% and youth unemployment is 50%. Spain went into the crisis with an 8% unemployment. It's about 25%. Youth unemployment is over 50%, right? And Nick will tell you a story about that. But it's only entering its austerity measures now. So what will it do to Spain if you look at what it's done to Greece? You're doing the same recipe for Spain that you did for Greece. And so if you enter at that level of unemployment, at that level of negative growth, of that kind of problem in your society and your banking situation, and, you know, we very sort of, I think we're a bit disparaging about the role of banks. If you want any economy to grow, your banks have to work. If you look at the amount of problem that there has been here, it's because banks have not been trusting each other. This question of counterparty risk. So what have they been doing? They've been interacting directly with the central bank. So the central bank is the counterparty to the banking sector in Europe. And what you've seen also is some very big corporates have created a kind of quasi-bank for themselves so that they can deposit with the central bank and not with the bank. So as long as you don't have banks functioning and fulfilling their traditional role, you're going to have very great difficulty of getting growth. And why does growth matter? Because it's the only game in town. Now you're seeing the US, and the US growth is reasonable.